Today on the podcast, I sat down with Leo Lucisano from Decentral Park Capital. Leo is one of the most thoughtful people that I've come across at the intersection of DeFi and the legal system. In this episode, we discuss the current regulatory state for DeFi in the US, how Decentral Park Capital is investing in the space, and much more. I think you'll enjoy this one, so without further ado, here's my conversation with Leo Lucisano.
Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Leo, thanks so much for joining us today on the podcast.
Yeah, likewise. Thank you for having me on.
Well, you guys are coming off a fundraising announcement, so I want to talk first just about Decentral Park Capital. So maybe we could start there and just tell me a little bit about the firm, tell me about why you joined and what you guys are up to.
Sure. So Decentral Park Capital, we've been around for about 4 years, founder-founded, founder-led, specifically focused in the digital asset space, early stage blockchain businesses, now with the focus really on DeFi. So the interesting thing about the fund, we're, I guess 8 going on 9 deep now. Half of the team, if not the entire team, have founded businesses or have been, operators or deep in the space now for a couple of years, which, having stepped into the role here the last 6 months, has made it, fairly attractive coming on board to a team that's well regarded in the space, I think, and frankly, well regarded by other founders in the space that I know, which was, I think, kind of one of the big check the boxes for me. We did just close, I think, publicly our $75 million flagship DeFi fund. So we've been deploying out of that now the last few months and are excited about putting that to work here in the next quarter or two.
That's great. What's a sweet spot for you guys? Do you guys invest pre-token launch, post-token launch? How do you think about that?
Yeah, given kind of where the market is now, we're in a couple of places. So pre-token, early stage, sitting down with founders that we know or repeat founders, right, who have been in the space for some time. And then there we like to be hands-on, right? So it can be, frankly, hands-on as possible, help drive alpha, help drive infrastructure, and kind of really bring the network to bear. And then obviously, if we're behind broader macro wins, right, we'll get into open liquid positions, open token positions. And then from an active strategy standpoint as well, we have some very technically enabled and energized teammates where we've built out some pretty fancy infrastructure and like to kind of deploy through that both quietly, one, because we think we have an advantage there, but then two, it really keeps us plugged in on chain and gives us a nice insight into where the market goes.
And I know your background is in law, actually, among other things. So maybe let's talk a little bit about your path to crypto and how you got interested in the space.
Yeah, so it's a wandering one, and I'll try to keep it brief because I always respect the guys that come on and are very brief in a sentence or two and just so concise. But it was a little bit of a wandering one. So started off in traditional finance at PwC, last financial crisis, both before and after, in mortgage-backed securities and CDOs, structured finance primarily. So got a good fresh look kind of on both sides, the ramp up and then the collapse, onshore and offshore. Took a little bit of a break, went the military route for a couple of years, and then landed back at law school and business school. And kind of there was the foray into my first, what I call FinTech 1.0 experience. So went out to Silicon Valley, worked for a digital lender, alternative digital lender that was competing against SoFi, and really kind of embraced the kind of unbanked, the democratization of finance approach, right? I think that really resonated for me. Landed in, kind of the core team at a digital banking startup in Sweden, raised traditional VC money, and we're really marching at building kind of a challenger bank that started on the deposit side, was moving over into the robo-advising side and then lending. And so had a really kind of driver's seat view to, that sprint to consumer banking, democratizing consumer banking. Ultimately ran its course and landed back in restructuring and investment banking. From there, became the CEO of a B2B2C business, a design business specifically. And so kind of through that process was really starting to think about how to showcase designers. Obviously, that was happening in parallel to the NFT boom. And so it was kind of this full circle, had very strong touch points early on with FinTech 1.0. And then through this kind of operating role in the design space and thinking through how to showcase both design talent, the NFT side, I knew coming out of that business and out of COVID that DeFi really and crypto would be next. And so obviously doubled down on the DeFi narrative, reached back out to the network, pounded pavement as one does in the space. And it was really interesting to see a lot of that FinTech 1.0 wave and the operators that I'd come to know through that experience several years ago on the West Coast really come full circle here in New York, on the East Coast, Florida, obviously, and then in Europe as DeFi really took off here the last year.
So you're someone that comes at the space with a really good understanding of the regulatory environment. And I'm always fascinated with people that really understand the space well from a regulatory perspective and then continue to go really deep and are sort of maybe unfazed isn't the word, but very constructive. So what's your just general framing on DeFi as it relates to the regulatory environment right now?
Yeah, it's interesting. So I try to bifurcate or look through two lenses, really, right? One is kind of my hopeful philosophical lens, right, around the promise of DeFi and trustlessness, right, and kind of alternative legal systems and governance in terms of how we can both deliver product, innovate in real time, and coordinate human resources. But then there's just having the touch points, right, of the last financial crisis. By training, I'm a lawyer and a CPA. Right. And then also having operated a business, been in FinTech, went through that whole proposed FinTech banking charter and saw that come to pass. And then obviously now in the DeFi world and knowing here the last year or two, obviously the regulatory drumbeat getting louder and louder. And as we step into this year, I think as hopeful as I am on a long-term basis, I think near term, right, we've got a lot of problems to solve and a lot of kind of challenges to overcome here in 2022 in particular. And I think you come at these from a couple of different ways, but what I find myself, at least founders that we talk to or investments that we look at, what I find myself thinking more and more, or at least expressing more and more is, hey, it's going to be bloody in the near term and very hopeful in the long term. But in the near term, we frankly have to embrace regulation, or at least meeting regulators in the middle, right? And I think that's always, at least up until recently, that's been a total non-starter, right? For pretty much what I call, not most, but a lot of folks, particularly people trying to bring products to market, right? And I think that tone has really started to change here recently, I think in a very good way, because I think going into this year, there needs to be a real discussion around, how we sit down and meet, whether it's compliant product features, whether it's specific go-to-market protocols, whether it's exchange type businesses, how we get those close to a regulatory box. Because I think once we are able to kind of fit those into a regulatory box or a legislative box that works, that kind of great flooring event happens. And then we're really off to the races as an ecosystem and as an industry. And I think that's been really hard to grasp for folks that have been very heads down now for the last several months and years. And I think that's very much starting to change in many different ways.
So you wrote this great blog post, blood, tears, relief, sweat, then exuberance was your phrasing. And you had 22 regulatory predictions. So on that sort of first one around regulators coming to the middle, there's a world here where a lot of these tokens end up being securities in the eyes of the SEC. And I'm curious your view on what the product ramifications would be for something like that. I mean, you could imagine that a distributed file storage network is not very compelling if every time you use it, you're making a securities transaction. Maybe that's totally different from using an exchange. So I think there's some product questions here that regulators will really have to wrestle with.
Yeah, I agree. I think, one of the things is the way you think about this from a token perspective and then from a product perspective, right? So when I think about token perspective, I think, securities offering, token sales, et cetera. I think, legal structure of the entity and path towards decentralization, right? That kind of path towards decentralization then brings you into kind of the second part of the landscape, which is really decentralized product features, right? And so fortunately and unfortunately, it's very easy for regulators to reach out and touch the low-hanging fruit, which is the securities piece of this, right? In terms of whether governance, whether utility, how decentralized that actually is from a token dispersion standpoint and how people are using the token, right? You think about Howie and everything that goes with that. On the decentralized product side, you start to get to open source GUIs, right? Grant and bounty contributions, and really a truly decentralized platform. And I think it's a pretty far cry, I think, in the near term, at least, to expect that regulators are able to sit down and scrutinize the nuance of decentralized product features versus, the actual treatment of these as securities based on how they were issued or how they're used in the marketplace. So when I think about, in the blog post you mentioned, one of the first bits or one of the first predictions, if you will, is legislators forcing regulators to the middle, right? And so I'm unfortunately a believer in the power of agency regulation, right? And so what that means is you have agencies that are entrenched in, the financial services industry, the most powerful industry in our economy and the global economy, right? And they have a very long arm of the law, right? And they have been very aggressive. I think they will continue to be very aggressive. We started to see that accelerate in recent weeks. Obviously, I think we're all expecting some things here in February from the administration and several agencies, but the onus is really on our industry and on our lawmakers to accelerate proposing and bringing smart legislation to the table, right? Because that's going to really be the only cap, I think, on what's honestly going to be a fairly aggressive second quarter here from an agency regulation standpoint.
Now, when you say you're envisioning an aggressive second quarter here, are you specifically thinking about the centralized crypto brokers in the spot market? Or, I'm also curious your view on some of these larger scale DeFi projects and how they get out of these SEC inquiries.
Yeah, it's interesting. And that's a 2-hour question right there. So when you think about what's coming, well, we know it's coming, right? Stablecoin regulation, right? And kind of fitting them into a money market or a charter type of regime, right? I think that's almost a foregone conclusion at this point. That is a whole other philosophical discussion between, permissionless and permissioned CBDCs versus private stablecoins. Obviously, headline news last week with the Diem project going to Silvergate, and then, rumors around Silvergate and others launching private stablecoins and them being used as a way to exert pressure through their banking charters on the crypto industry in terms of an allocator standpoint. But I think here in the first month or so, right, the low-hanging fruit's stablecoin regulation, right? The second piece of this, which is quickly behind it, is around custody, right? And custody really being the gate to how big banks, traditional custodians, broker-dealers, right, interact with the space and really turn on and off the faucet for large institutional dollars coming in, but then very much also using that same regime to apply pressure to existing businesses in the space that purport to be that, custody and assets, the defense goes, right, are not securities in the first place, right? So I think that's probably what comes next. And there's a lot of headlines there to point in that direction. I think a lot of these other pieces are really around regulating from a consumer protection standpoint, those large protocols you mentioned, doing two things. One, consumer protection, and then two, coming at them from a securities angle, right? So the Celsiuses of the world, right, that are constantly getting attack vectors from state regulators around issuing interest-bearing products, right, or lending type products, right, those being, regardless of the underlying security, those being within the mandate of state regulation. You're seeing that at the federal level as well. In the background, those folks are chasing down banking charters, right, so they can kind of eat the system from the inside out. But I think the case for them really starts to see scale when they get a regulatory flooring there, whether that's through legislation, right, or that's through some sort of charter mandate. I think the other component there is, to the extent large protocols are resting on the decentralization narrative, Uniswap is obviously the blue chip example. You get someone who is the flag bearer, frankly, of a decentralized protocol, right, and the functioning DAO, right, which is the whole kind of underbelly of this, soft underbelly of this. And I differentiate between hard decentralization and soft decentralization. So legal versus non-legal. The soft decentralization, the DAO component of that, right? We now know that the investigation into Uniswap, right, although it was purported to be around marketing, I suspect, or most people suspect, really it's around decentralization, right? And, the efforts of others component of the Howey test, in addition to, a couple of other, what I would say, not myths, I guess you could call them regulatory myths around how people defend decentralization in terms of it falling outside of the mandate of being treated as a security.
So let's play this out to maybe the worst possible conclusion is just that the SEC goes after some of the people behind some of these large blue chip protocols and says that the tokens are securities. What happens then? Do you just imagine that this is just, we have anonymous developers that fork the code and these projects continue? It's hard to imagine putting the genie back in the bottle here.
Yeah, it's interesting you kind of approach it from that angle, right? So there's no turning back the clock, right? And just given the scale of just DeFi in particular, right? And given the resource capabilities of the primary regulators, meaning enforcement attorneys, right? Folks that actually can reach out and run effective enforcement, right? I think what you get is maybe two approaches, right? Maybe you get a day of reckoning where everybody wakes up on a Monday morning and there's 10,000 enforcement actions, right? And everybody gets in line, right? And then you see whatever applicable regulator, probably the SEC, right? Then starts to go down the roster and pick off and continue to build various features from an enforcement standpoint and put those in their kind of enforcement foundation, right? Pre-settlement, plugging those in, right? So I think you then see what you've already been seeing in the space now for several months, if not years, right? Is the pace of innovation taking one step beyond, right, what the law or what the regulation mandates. And I think, frankly, the DeFi community and the crypto community at large has been very effective at that, right? We're not even getting to NFTs. The financialization of NFTs, right, is a very good example of something I think regulatorily sits just beyond the cusp of, say, DeFi regulation, right? And so to go back to your question, right, there's a day of reckoning approach. I think that's very easy mitigated by founders out there to then iterate, whether it's through a new project. We both know how easy it is to stand up a new project or at least iterate one that's currently under that mandate and evolve it beyond the scope of that regulation. Right? Whether that's, how the security is treated, whether that's a DAO or decentralization mechanic, whether it's a specific product that fits within a regulatory framework, meaning it's an exchange product, a DEX, an AMM, or it's some sort of stable coin, right? If you think about stable coins, you think about regulators focusing on asset-backed stable coins, right? And then you see the proliferation of algorithmic stable coins, right? And then you go down the spectrum of algorithmic stable coins, and then those start to look like voucher systems, right? Those start to get down the spectrum looking like publicly traded companies we all know, and they have become to look like Venmo, PayPal, right? So there's a spectrum of, what I would call creative DeFi and crypto and publicly traded product-oriented fintech companies. And it's very easy for deft founders to kind of run across that spectrum in real time, which makes it, frankly, very challenging for regulators, which I think is why you're seeing at least proposals the last few weeks, and you'll continue to see the next several weeks, pretty expansive proposals coming to market from regulatory agencies, from Biden, maybe even via executive order, that are pretty sweeping and pretty broad purposely, because I think they feel that burn when they start to look under the hood from some of these previous enforcement actions.
It's interesting. One of your other predictions is that we'll actually get the approval of a spot Bitcoin ETF by July. So it seems like you're bullish on the institutional players actually exerting some influence here and actually getting that done.
It might be an asynchronous opinion, but I do think it's coming. And I think in net, it's a very good thing, right? I think, again, it's another flooring exercise, right? We obviously had the recent 2 denials last week or over the last 10 days. But I think you see something move during summer, right? And I think it moves because, again, the SEC sees it within their mandate to approve that, and they use it to, build what I call another wall of the regulatory box, right? It gives them more of a mandate, more control over flow of funds, particularly institutional flow of funds, right, into spot BTC, right? The whole narrative that it's for investor protection, why they're denying these applications here in recent weeks and months is very much in contention with the derivative exposure to BTC through a derivative ETF, right? And so I think this in conjunction with a fairly robust push on the custody front, you could see a multi-pronged approach from the SEC, and this being a prong of that, right, that allows them to, in a friendly way, put a tighter stranglehold on how funds flow in and out.
Nick and I talked about this on the podcast, I think it was last week. It's at some point, you're going to have so many financial services firms that are trying to build infrastructure around this asset class that they are going to get very frustrated that they can't build the products and services that they want to do. I mean, how many of these retail brokerages are just really frustrated that they haven't been able to keep up with Coinbase on the spot side? Also, they're building custodians and all sorts of brokerage infrastructure to support this asset class. And so they're going to want an ETF at some point, and I'd imagine they'll start to get more vocal. And similar to how people in the crypto industry just writ large are getting a lot more vocal and active on this as just a single issue.
Yeah, I think, and maybe you guys are seeing it too, we're seeing it every day, right? Some of your traditional kind of asset managers, traditional custodians, traditional broker dealers, frankly, who are starting to step into the space, right? Who presumably have been at war with their risk committees, right? To kind of get in and both service institutional clients. And where does that start in a space like ours, right? On the alternative asset manager side where we sit, right? And so what you see is some broker dealers who have very traditional finance, street businesses starting to partner with, alternative custodians that are DeFi native or crypto native, right? And you're starting to see them work side by side in real time now. Obviously, those are easy M&A targets, down the road as things stabilize a little bit and they can port in some of that blockchain infrastructure, right? But the real challenge, again, is getting to a point where maybe the traditional broker dealer gets comfortable with the custodian or the custodial provider and being able to fit that within their own kind of license regime. The compliance regime is the tipping point, right? So you're getting pressure from a couple of different angles, right? Approval of spot BTC ETF, right? From the custodian standpoint, who can purport to be a custodian, particularly a qualified custodian, right? And how that's applied to crypto is a whole other conversation. And then how broker dealers are starting to interact in the space if those broker dealers are coming from a traditional street perspective.
Yeah, it's one thing to ignore it if you're in the inside of one of these big institutions when it's small. But when you have examples of, hey, Russ Stevens just built NYDIG from $0 to $8 billion over 3 years. And, you have a bunch of banks that are just sitting around watching that happen. They're effectively building like Goldman Sachs for crypto. At the other end of the spectrum, you have Coinbase, just the existence of Coinbase. And while every other retail broker just kind of ignored it, you get into this spot where if you're in charge of one of these divisions at a bank and you're eking away custody at 2 to 3 basis points, hey, why don't we launch custody in a product line where you can make 25 basis points? The economic incentive to just get really active here and to pressure your regulator to give you some clarity becomes pretty powerful.
Yeah, it's interesting because, there are a few primary players that's, regulated banks that play in our space, right? And you've seen them acquire, I just mentioned Silvergate earlier, and that's all public headline news, the Diem asset acquisition recently. But there have been several banks that look like that have been very effective about building out their own infrastructure, right? Their own internal blockchain infrastructure that plugs into the Coinbases of the world, the Fireblockses of the world, right? And allows for a fairly integrated technology stack, particularly to crypto. Again, the overlying issue here, right, is the custodial piece of that, right? And where, the finite bumpers are on the custody of assets between how that tech stack builds out around the, kind of the central banking piece of that infrastructure. What's been interesting too on the retail side, right, is you have challenger banks folding into crypto, right? That's piggybacking and also fueling some of that larger retail growth. Robinhood is a good, obviously a good example on the robo-advisor side. And then some of the other challenger banks in the space too. Again, from my experience going back to FinTech 1.0, where what I call the shadow banking of retail deposit balance sheets was fairly prevalent. And it's still prevalent, but less so, given some of these banks have matured into a traditional banking paradigm. You have challenger banks going and finding a small regional bank with a very stale balance sheet with a promise to bring them hundreds of thousands of, iOS-based accounts, right, that can frankly revitalize their entire business. That local regional bank has never even considered the cash outlay to go build a direct-to-consumer infrastructure like that, right? And you're starting to see that not just accelerate, but accelerate within the context of crypto, right? Where now, I think if you're a regulator, particularly a banking regulator, you start to have to wrestle with a couple of different issues, right? Not just how assets are treated, the custody of those assets, but really parts of the banking charter in terms of how they can partner and who can get exposure to the balance sheet, right? So you're seeing I think, pressure top down, left, right, both on the consumer side and then on the institutional side as well. And then, obviously, of course, I think we're well past the point of contagion effect, right? If you think about publicly traded companies, your MicroStrategies of the world that have fairly strong BTC exposure, right? The Coinbases of the world that are publicly traded, obviously held in structured products stateside, right? You start to look at a fairly ingrained, what I call web of contagion, if you want to call it that stems from kind of the institutional custodian side all the way to the retail investing side, to the retail banking side, and everywhere in between. So I think it's, at this point in time, it's almost an impossible nut to crack. You can't unwind the clock. And again, it's the head wall of enforcement is coming, if nothing more, to kind of punch the industry in the face so that everybody can kind of wake up and grow up in real time, if you could call it that.
And how does that translate to what you guys are doing at the fund level as you're dealing with these entrepreneurs? And also curious your view on just KYC. I know you've written about permissioned KYC use cases in DeFi. Curious the type of advice that you're giving to your founders.
Yeah, so there's a couple of interesting things looking at here, right? So on the institutional DeFi and KYC piece, right, there's a pretty good argument for a straddle strategy, right? Meaning looking at people that have embraced KYC out of the gate, right? Which is obviously incredibly taboo if you're talking to a founding team, right? But there are people now that are building businesses with healthy dialogue with regulators, right? Whether or not they're on the path to some sort of licensing regime or they've already got the head nod, right? That are trying to bring, STOs to market or what have you. We've come to learn recently Soma, who you've mentioned before, is a good example of that. On the other side of that, right, you have fully decentralized offerings, right? Synthetics is obviously a great example of that, right? Where, KYC is not even within the breadth of a synthetics-based protocol, right? And so if you think about deploying into opportunities on the permission side and then opportunities on the fully decentralized side, right? Regardless of where this goes in the near term, in the long term, I think there's a very strong notion that KYC compliant entities will see cash, we'll see flow of funds rather, particularly on the institution side, depending on what the protocol is. But then on the, fully decentralized side, when you think about retail DeFi use, right, I think there's, to the point we made earlier around the ability to innovate just beyond the cusp of regulation, I think there's a really strong argument that people that embrace full decentralization will do well or will remain complex enough, right, or crafty enough to live outside of any sort of near-term enforcement box. So that's one theme. Another one I mentioned earlier is around algorithmic stablecoins, right? And so when we think about this discussion, we can have the philosophical discussion around stablecoins and CBDCs, but when we think about private stablecoins in particular and asset-backed, there are some extremely interesting and smart algorithmic plays out there that I think live outside of this next wave of stablecoin regulation on the asset-backed side. There's something we really like to see recently on the NFT side. I know you guys are somewhat healthily into the NFT space now, but financialization on the NFT front, I think, provides a really interesting and rapidly kind of accelerating and growing space that I think is beyond what's going to happen here the next couple of months from a regulatory standpoint. Obviously, institutional brands already doubling down on the NFT side. Some really interesting NFT protocols coming to market that very much look like some of the traditional DeFi offerings, whether they be exchanges or rehypothecation protocols. I think there's kind of a really interesting play there. And then from a middleware standpoint, obviously, we're big believers right now, and I think this goes hand in hand with regulation. Everyone is seeing this rotation from growth to value. And I think having come from a fintech 1.0 standpoint, a true, what I call early stage tech startup type of environment, right? The industry now is seeing cash flowing protocols, right? And I think that's becoming a fairly healthy narrative. And to the extent a lot of those provide middleware services across chain, right? And start to very much look like, your AWSs of the world, right? That traditional institutions can relate to. We start to see a pedigree, if you will, or a brand of protocols that lives as the middle layer, across sectors, NFTs, DeFi, stables, et cetera. You start to kind of change the narrative a bit, right? And I think people understand that these aren't necessarily 2 to 4 folks, even though they can be, right? 2 to 4 folks building some sort of wonky next gen DeFi infrastructure. They're building just better versions of traditional businesses, right? And us, frankly, having to own that as kind of players in the space, but then also, bringing institutions in the space, I think it really doubles down, or at least focuses attention on businesses that those types of investors are already akin to looking at, right? Or akin to investing in. And so when you pair that next to regulation, I think the same headwinds are there, right? To the extent businesses want to scale, to the extent they want a broader audience, to the extent they want to live within some sort of regulatory paradigm, again, that comes back to the KYC mandate, right? And what level of KYC is necessary, to what extent do regulators understand, permissionless or, kind of ZK offerings, right? Where you can verify without truly verifying, right? And getting people to understand that, I think becomes a really powerful scaling tailwind, right? That frankly drives a lot of value here, regardless of what happens near term. So, when you think about regulation, you think about tax revenue, you think about consumer protection, and you think about anti-money laundering, right? And those are kind of the 3 big buckets. And I think as the industry grows up this year, regulation comes at those head on, I think we can solve those in real ways in the near term. And I think once everybody kind of understands that and accepts that, I think then you'll start to see a real kind of explosion in growth again in the way that we saw last year.
I agree with that. Certainly. It's interesting because anyone who has the view that regulation is not coming to the space is asleep at the switch. And, it'll be a net positive if it's done right, in the sense that more capital will be able to flow into these projects and teams. Now, there's some real risk there, obviously. If these entrepreneurs that we're backing are building powerful systems that are trying to seek self-sovereignty over money and better financial services and, better internet architecture. So there's some big swings going on here. And I'd be curious your view on just what is the best way to support the industry from an advocacy perspective, and what groups are doing interesting things. What should investors and entrepreneurs be focused on championing as this industry matures, and certainly as the regulators get more involved?
That's a good question. So I'll tackle it in a couple of different ways, right? So I think the lobby has really matured in the last, call it 18 months, right? I think last year was a banner year for the crypto lobby, right? Chamber of Digital Commerce, Blockchain Association, obviously leading the pack. You saw the FTX-backed team come to market from a HODL pack standpoint. You've got the Bitcoin community coming together too with the legal fund, right? You've got the DeFi education fund coming out of the unique ecosystem, right? So you're starting to see real dollars go to work. And I think, we're members of the Chamber of Digital Commerce, right? And I think, we're friends with folks at the Blockchain Association. They now are starting to talk in a way as well, kind of cross-organization, really as a unified front, right? And I think that's translating into obviously what we saw in Q3 and Q4 last year, where we responded very nimbly as an organization to lawmakers as legislation was getting chopped up in the final mile, right? And so I think you're going to see more and more of that. We saw that last week, removing some of the expansive language around the reach on stalling or, overseeing international crypto transfers out of the US, right? I think you start to see those repetitions and get very confident that we have very smart people with a lot of resources at their fingertips and a lot of inroads into political networks and into public offices, right? That allows us to kind of keep it checked on what's traditionally an unchecked agency mandate, depending on, who's in office, who's at the highest office. And so to the extent people are not involved in those organizations, absolutely critical, right? To step up, participate, donate where possible. I think that bleeds into, again, this year, we've already started to see it, escalate at the core. But I think you pointed out earlier, this is very much becoming a single voter issue, particularly for earlier generations, right? I think to the extent this touches everyone's lives, you're starting to see now local political cycles very much embrace the crypto discussion, right? And that's showing up on every level, local, state, federal. So to the extent those people raise their hand and they fit your worldview, let's get behind them, right? And I think doing that more and more will move the needle quite a bit, because it's one thing for our industry groups, right, to show up and educate. It's another thing for us to put people in office that are already educated, right? You can imagine the pace of adoption, the pace of innovation moves that much quicker, right? When you don't have to spend time educating lawmakers, right? And so when I think about the traditional political environment, that's, I think, the way to go, continuing to support in that way. And then the protocol piece, right? I think it's to the extent people sit in our seats, right, where we're working with teams, helping think through whether it's product market fit, right, depending on what the protocol is and the regulatory environment around that, thinking through decentralization mandates and DAO infrastructure and structuring it that way, being very realistic, right, in a way now to kind of proof some of these structures, some of these protocols, some of these products to have, hedge strategies, right? Whether it's around KYC, whether it's around exchange regulation, right? Whether it's around true decentralization, statelessness. I think if we play by the rules the best we can while innovating, it creates an opportunity to avoid a lot of bloodshed, so to speak, in the near term and the long term. And the reality is this doesn't have to be super messy or super contentious, right? I think we can do a lot with technology. I think we can operate within a lot of the mandates where there's clarity, and just making sure people are motivated to do that, I think will go a long way.
Yeah. I think you're absolutely right that it's becoming a single issue topic, though. And if you think about the incentives for some of these politicians that are actually leaning into it, you should see the engagement that they get when they start talking about blockchain and crypto on Twitter. It's unbelievable. I mean, they're getting more engagement on a pro crypto tweet than they've gotten on anything in the history of their campaigns. And so, I think it's going to be that. Politicians obviously like the attention there. Plus, it's the fact that now these industry groups are actually putting money behind some of these candidates and putting money in opposition to some of the candidates that are, the Brad Shermans of the world, the Stephen Lynches of the world that are very hostile. So I think you'll see that start to have an impact on behavior.
Well, it's from a political standpoint, right? It's forced smart perspective, right? If you just look at the Senate and you think of Loomis, you think of Toomey, right? It's kind of forced them to really, whether they intended to or not, really become advocates of the space, right? In a way that kind of calls out overzealousness by regulators from time to time based on whatever the hot button issue, crypto issue is at the time. But you're totally right. I mean, everybody knows the power of crypto Twitter, right? And I think the community leverages that maybe more effectively than the previous presidents. And so to the extent they can continue to deploy and continue to use that as a mobilizing force, more power to us, right? I think it'll keep accelerating in that way. What's interesting, again, is, the themes of, frankly, what I wrote about in the blog post. One of the core themes is really 2022 year being the year of the industry growing up, right? In a lot of these ways, right? Not just around compliant products, not just around, single issue voting, not just around, settlement of various banner legal matters, right? But really, the potential for M&A, right? The potential for DAOs to find their place in the world, right? The potential for smart legislation to really take hold and drive conversation coming out of this year, right? And a flooring exercise across the board to really bring in that institutional money, bring in mass retail, and really start to reset kind of the financial services landscape end to end. And I think that's maybe last 2 years, that was a crazy thing to say out loud, but I think in a very coordinated way coming out of this year, that's a very real possibility.
Totally. Well, I think you have an incredibly unique perspective on this, coming at it from a lot of different sides, the regulatory side, the financial services side, and certainly the technology side. So this has been a fun conversation. We'll have to have you back. Where can we send people to learn more about Decentral Park and follow you online?
Yeah, absolutely. So we are research driven. We love doing it. We love putting stuff out there. Find us at decentralpark.io. Follow us on Twitter at dbc.io. We have been very purposeful lately about putting out more and more of our thought leadership and are excited to continue to do so. So excited to dialogue with folks out there that are interested.
That's awesome. Well, thanks for your contributions and excited to have you on.
Yeah, thank you very much for having me. Enjoyed the conversation.
Thanks for listening to another episode of On the Brink with Castle Island. To find out more about Castle Island, visit castleisland.vc. To listen to all of our podcast episodes, please go to onthebrink-podcast.com or just click on the tab in our website. Thanks for listening.